Good evening. Anybody who knows Brad Mills knows that I'm British, not American. So, name's Simon Purkiss. I'm the MD. Unfortunately, Brad hasn't made it here yet. Yes, as I said, I'd like to sort of run through with you the Consolidated nickel mine story. We are a private company, so we are slightly different to everybody else so far. But we obviously do have the intention of listing. And you'll see why we're going that way around, because we are looking to restart the Manali nickel mine in southern Zambia. It's been on a high level of care and maintenance. The owners, Jinchuan, gave up in November 2011. Kept it on a very high level. We're talking $1 million a month sort of care and maintenance, which has now been taken down to about $200,000 a month. But it does mean that the mine's dewatered, the plant equipment has been sort of well cared for. There's 60 employees, 40 of which are security, so therefore most of the plant is still there, which obviously is important. To date, over $180 million has been spent, all the key infrastructures in place. We started talking to Jinchuan probably around about 2 years ago. It took us 18 months to get to an agreement. Some people say that we're patient or maybe pig-headed. But we acquired the rights to the Manali resources, and it's our intention to bring Manali back into production within the next 12 months. It's a low-cost opportunity. We're not buying it, we're renting it. And as I said, we are planning to fund this once it goes into production. As I said, southern Zambia, we've got an established JORC resource. We had to find out why it failed, and it has failed twice. That's one of the reasons why we're not bringing it to market until we've got it back up and running correctly. We're looking at around about 30 to 40,000 tons of nickel in concentrate over a 7-year period. We've got over $500 million worth of metal in the ground at today's prices. We're looking at requiring $40 million to start up, and yes, depending on where your nickel price is, it's got rather nice returns. We've also got blue sky sort of expansions. We have just recently, back in December, brought in Brad and his team from Plinian Capital, who put in the first $4 million to finish off a feasibility study, and have committed to put in the balance of $40-odd million once we've completed that. The feasibility study is due to be finished. I'm looking over at Craig, our COO, who's responsible for it, in 4 weeks. Once we've done that, we'll move forward. Previously, very high operating costs. It had the wrong mining method, poor metallurgical performance. It was recoveries in the sort of in the 60s. Remote offshore management. Any Australians here? My apologies, but running it from Perth just didn't work. Our thing is that we can't control the prices, but we can control the operating costs, and so we've got a mining reserve. We're going to focus on the thicker part of the ore body. We've got ore around about 30 meters thick. Reduce the mining costs by a change in mining method. We've changed the processing. We've put in a DMS plant, so we're putting less material through the floats, and management will be on site. We're looking at a Avoca mining method, cut and fill. As I mentioned, we've got DMS that the floats will go straight back underground. I'm just aware of the lady at the back with the sign. She is quite intimidating. So the DMS test work worked very well. We've took a 1% head grade up to 2.5 into 50% of the mass with 95% of the recovery. That is a bit of a game changer as far as the operations are concerned. It means we can drop the cut-off grade in the mine. We're only going to be utilizing 50% of the plant. We're looking at producing a 12% nickel concentrate, which at the moment the discussions are to take it down to our friends in Zimbabwe, the Bindura smelter, and we do have this upside capacity. We're finishing off this feasibility study. Tetra Tech are the main drivers behind that. There is blue sky opportunities there as well. There you have the Enterprise deposit, which is the one that we're dealing with. We then have Voyager, which has got an inferred 1.2 million tons, at 0.9%, and then 2 other targets as well. Somebody was a fan of, I think, Star Trek when they named this. We're at the bottom end of the cost curve, particularly if you discount Norilsk nickel, which is right, the tops of 15%. The Zambia itself, well, it has gone through another transition as far as democracy is concerned. Mining is a very important backbone of Zambia. We are looking at sort of a well-established transport communication network. We're 75 kilometers on very good roads. We've got dedicated power lines. Basically, they're a very good sort of operation there. The taxes, the 8% mineral royalty tax, it was sort of highlighted a while back. And I don't think anybody sort of really thought that the government would go through with it. They have. To us, it's a bit of a positive side, but we are sticking together with the rest of the Chamber of Mines at sort of seeing what we can do to make it more amicable. So, we've got an image feasibility study. We're leveraging off $180 million that's been spent. Strong government support, very strong government support. The key technical management is in place. The project's got robust returns, and we're expecting the project development team. We've got mining experience in Africa. Thank you very much.